Today is Thursday, February 29, 2024. It's about 8:49 a.m. Eastern. I waited to see what would happen in the pre-market after 8:30. There was an announcement, some data release, announcements made at 8:30, and at the time the spiders were hanging around the 505, between like the 505.34, 504.85, even below 505 a little bit. And at 8:30 they shot up over 50 S&P points. They're currently at 507.87. They went up to 508. So they covered a lot of ground in 10, 12 minutes or so, 15 minutes. And wanted to point out anyway that a lot of these levels are relatively close together, 50 cents, and they power through them. Of course, that's the pre-market. We'll see what happens after the market opens in the regular session, but it would be prudent to treat these levels with reduced position sizes if and when they come back down into them. If they go higher, I don't have anything currently, but I will analyze things in real time. But these are the levels out of the calculator for the most part this morning. The one at the very bottom, for what it's worth, is kind of the last line in the sand for the bulls to play defense. There's really not much below that. But we will take a look at all the trades taken in the E-minis after the market closes this afternoon. Now that the market is closed for the day, you can see that there was a lot of back and forth between several levels today. 5 levels were hit, and some trades were entered. It was not a straightforward day, so this chart merits some explanation. What you're looking at is a chart with the levels adjusted with a 5-cent buffer as price came into them. These are all the operating levels, and we'll dive into this shortly by looking at recordings of live trades. After 9:45 a.m., the spiders were above 508.16. As you can see here, the operating level there was 508.21. There was an order activation keyed into the system to buy 2 ES contracts if the spiders came down and hit 508.21, but here is what happened. They came close to the level and bounced up several times. They bounced high enough and often enough to where this constituted a near miss scenario. You see the green line on the spider chart as my reference. I canceled the order when it became clear to me that if and when they would come down to 508.21, it probably wouldn't provide the right support anymore, and they would probably slice right through this level and continue lower. All I can say is that there are things I'm looking for, and these things were evident on this chart and the other charts on my other screens. So bailing out now and not entering the trade as originally designed was the correct decision, as you will see shortly. Meanwhile, I identified 2 other levels higher up and plotted them on the chart in the event the spiders would continue higher. These new levels would be entry points for short positions if the spiders got there. They never did during the trading session, so those levels are non-factors today. But just so you know, that was the reason that they were added after the fact as I analyzed the price action in real time. And you can see me plot them right now. 511.10, 510.13. The spiders did, in fact, fall down through the 508.21 level. They continued lower. They hit 507.72 and 507.24. So buy orders were entered or had been entered in the E-minis at both of these levels. And as they were entered, it gave me a total of 4 contracts in play on the combined position. The design was for the E-mini trade to give me 4 points from the average entry point from these 2 levels. And you will see that when the spiders got back up to around the 507.72 level, that they started to stall out. This happened to be right around the 50% retracement from that recent fall. And I did not like the way they were trying to go higher, but not succeeding. You'll see this here. They got up pretty close to the 4 points, which is $800 with 4 contracts. So they pulled away quickly, or when they pulled away quickly, I closed out the position as they neared the entry point at essentially a wash. This basically gave me a point or so, fraction of a point, but as you'll see as this recording continues, that was the right decision. 2, because they never got high enough to hand over a base hit. So if I had stayed in this trade, it would have not played out as designed. Better to bail out at a small profit than to hope for something that doesn't exist and incur a larger loss instead. So you see them pull away pretty quickly, and I jumped out. At this point, I had an order keyed into the system to buy 4 ES contracts if the spiders came down and hit 506.26. Well, first of all, let me just point out that after all these levels were hit at this point, there were essentially no ES points in the bag. The spiders had just kind of petered out by now. Volume had decreased. There was not a lot going on. They just hung out around these levels that we had already satisfied for various reasons. Not a lot of energy in either direction. So I had an order down at 506.26 to buy 4 ES contracts if and when the spiders would come down and hit that point. It was around, I think, 11:30 or so. I had a business phone call come in. I stepped away from my screens, and I did not think it would take very long to wrap up the call, but it wasn't until well after 12 noon, 10 minutes or so after 12, when I got back to my screens and I saw that I was an active trade. Let me just speed up here to show you. So it was around 11:30 or so. I left and did not see this happen. They came down. There's 11:30 and hit these both levels. I'm going to let this continue on. So I got back to my desk and saw that I was in an active trade from the 506.26 level. So I forgot that the automatic order trigger was in the system, and my 4 contracts when I got back to the desk were around $1,500 to the good at that point. But the unfortunate thing is that I did not have an order in the system to buy more contracts down at 505.39. As you can see, that was the money spot. The spiders reversed there perfectly, so I did not have any more than just the 4 contracts in play from these levels. But in any case, both of the levels were obviously satisfied. I didn't know where the spiders were heading next, so I closed out the trade almost as soon as I got back to my desk and I saw what was going on. It was okay. Got around $1,100 on the trade. It could have been better if I'd been paying attention and bought more contracts down at 505.39, but it was what it was, though, and I'm not complaining. Let's speed up a little bit. It was about right here when I got back. Saw what was going on and closed out. I'll just let this play out. It was around $1,100 with the 4 contracts, however many points that was. And not a whole lot happened after this. The spiders did not hit any more levels that had not already been satisfied. So we can look in a moment at the entire day to see everything in one place. So it's a quarter after 12. I think it was about right now. So what was going on? Yep. And I closed out the trade. So I'll just pause this and we will jump back into the full chart. So an interesting day for sure. Lesson learned for me, at least, is to be aware and not forget when you have trade activations keyed into your trading platform. An oversight like that could be disastrous if you're not paying attention. But all these levels were hit, but not all trades were typical. But that was the day. Let's look at how all this translated into profits by checking out the tracking log. So starting at column H, that level was not triggered because of a near miss. The level in column G was averaged in with F, and it was a wash because of a near miss as well. So no trades there at this point. E should have been averaged in with the level at column D. I only got this level here, 506.21, but this was a pretty straightforward trade. It should have yielded 8 points if I've been paying attention. So 8 points for all of this for the day, and not too bad. So I hope you found this interesting, maybe perhaps learned a few lessons here. Thanks for watching, liking, and subscribing. Have a great day.